Talked about the you being at the ATDC. You're obviously not there today.
Yeah, well, the ATDC's held like a very near and dear place to me in the sense of it's sort of been my halfway house. And so like most of us, we always end up popping into the ATDC when we're in between things. And I was fortunate enough to have the last 10-year, 11-year run starting Control Freak and BLH both in the offices there. Unfortunately, we moved out and
Wait a minute. I just made a big deal about
this. I know. Well, you didn't get a chance to let me.
So you made your money and you ran. Is that it?
Oh, it was a rolling 90-day lease. So no, it's one of the best things about our community is that we have, resources like that, and to be able to take advantage of those things and have the support there is immense. So we didn't take the money and run, but we just take a little pause. So
that's great. Tell us I don't know that a lot of us know what BLH Ventures is. Tell us about that investment vehicle that you've created.
Yep. So BLH basically is, it's a joint checking account. And so, if I'm the small check, my business partner, Billy Harbert's the large check, and we've been investing together for the last 12 years.
What's his name?
Billy Harbert.
Billy Harbert. Okay.
So Birmingham guy, construction business. They're the largest builder of embassies for the U.S. government. They did not build the embassy in Kabul. But they've built large bunkers all across the world. And so he's made his career building these projects all over the world, from, Djibouti to, Dar es Salaam to, London. And so it's interesting. When I started doing angel investing, eventually I had some people after I did a deal or two that seemed to be working. Then you have people that sort of they came alongside me, so it gave me a little bit more depth as far as money resources go. How did you come about meeting Billy? And yeah, it's actually a great story. It actually
you were banging your hand on your blotter there,
Yeah, sorry.
It's okay.
I met Billy actually really through the angel investing process. He was at Emory getting his MBA and invested, done 2 deals, blew $250,000 on each deal. Within 6 months, both those investments were gone. And then somebody said to him, "Hey, Billy, you're not really good at this. Why don't you team up with somebody that may have a little bit more insights into the technology investing area?" And, fortuitously, I had just come off the air defense exit and was camped out at the ATDC trying to figure out what was next. And a woman named Jane Shivers, I don't know if you remember Jane, she used to run Ketchum here in town, mutual friend of both.
Who is this? Jane who?
Jane Shivers. So she used to, PR. She was in the PR business, ran Ketchum, and she made the introduction. Said, Ashish may know a little bit more than you about this stuff, which was probably true. A little bit was probably right, and made the introduction. And I went to Birmingham. We met here. He lived here part of the time, but I went to Birmingham to go to meet him and meet some of the other team members. And ultimately, it was a couple of meetings, and before I knew it, we were in business together. And it's been a dozen years now.
Well, why did you have credibility with him? I mean, he tried to do it himself, like you said, and he lost his money pretty quickly doing it. And like, why did you show up and all of a sudden, 10 years ago, how old were you 10 years ago?
I was 34.
Yeah. So why all of a sudden would you have credibility with the guy just because you were at Emory, or was it the introduction that gave you credibility?
Well, I think what it was is that it was all the, coming back to your theme here is the relationships, right? I mean, I never really had a skill or a trade, right? I hung out with guys like Patrick Taylor and Lance and sort of drafted off of the things that they would teach me or I would see them doing and sort of, fast follower. And so what ended up happening is that through the Atlanta CEO Council, and then when we started Venture Atlanta, unbeknownst to me, I'd be in the venture world at some point, but I was really networking and building relationships such that I could pick up the phone and call people and say, "Hey, you're doing this," or, "Hey, I've got a pool of capital now. Can we join you in this deal?" And it was really those relationships in the community that, in a lot of ways led me to where I was able to be successful in this.
Where did you take me back? So where did you start then? And then how did you sort of jump the fence into the sort of angel investing world,
Yeah. So I'll back up. Some of you this may be a little bit remedial. But so I finished at Emory in '98, and then spent 6 months working for a guy named Lonnie Cooper in the sports management business. And so my degree was in religion, which had nothing to do with sports or technology. It was just what I had to do to get out of Emory because I failed organic chemistry. And so that was the only path out of Emory for me. And so while interning there, the computer networks in that office went down. And as the Indian guy in the office, I went and fixed that, reset the router and figured out what the router was, and it's not the switch apparently. And so I was doing the IT work in that office, really just by tinkering around. Fast forward, the idea was, hey, what if we, more small businesses need, IT support? Well, we can't wait till Friday for Nerd Technologies to show up when I wrote my name on the office manager's door on Monday, and I can't get the PowerPoint or whatever it is in the network. So the idea was sort of blossomed in my head, which was, hey, what if we could, do a managed service business and do multiple small businesses? And so we, back in '98, you could put together a business plan like you can now and go raise money. And myself and two other co-founders started what was called Vertex Networks, which was one of the first managed service providers in town. Jay Chaudhry and Raj and a handful of others were our angel investors in that business. And that business ultimately wasn't successful because we got caught.
How did you meet them to get those investments? Because those are two pretty big names you're talking about here.
I showed up at a Thai event. I went to a Thai event and I had an idea for this business. And, I looked like a fish out of water because I'd never been to a technology event. And they, Raj and Harish were on the other side of the table at that one event. And the next thing I knew, I was on the other side of the table at the next event because they sort of sucked me into running registration or whatever it was. And through that community organization, I was introduced to people like Jay and Deepak Raghavan and a handful of the other successful Indian entrepreneurs. And, they kind of took me under their wing and said, hey.
It's interesting that you say that. So what you're saying, it's not that I just met them and I had a business idea and then they invested in me, but they recruited you to become part of the Thai organization.
Yeah.
And so you were actually doing work for Thai and that community. Yeah. And I had that same experience though, when this is way back prior to all that, there was the Business and Technology Alliance, there was Southeast Software Association, and it was my involvement that actually built those networks in a meaningful way.
Yep.
That's versus exactly just showing up at a meeting, right?
That's exactly what it was, Charlie. And, it went from Thai, which was sort of more Indian entrepreneur focused at that point in time, to the Atlanta CEO Council. And, that was another broad base of relationships. And then from there, it was, we started Venture Atlanta. Brendan McGuire, if you guys remember, he and I started Venture Atlanta in a cube in Raj's office. And so that Red Herring Venture Conference, it was successful for about a year and a half, and then it blew up. Right. We took that over and basically said, all right, this is a platform. And it was by running that conference for, in the pre-Allison years, that really helped me to build a broad array of relationships, both here and as well as out of town.
That was really cool. That's some important history. I remember the Red Herring Conference there. I still remember the first meeting that I went to. And but it was, what's interesting is how Thai didn't insist on owning Venture Atlanta, but opened it up. That was really a very, very smart move strategically for Thai and also for our community.
Yeah. I think it was the Atlanta CEO Council actually, but still, listen, at the end of the day, we knew it was a community resource. And so, for one organization to own it was selfish. And so when we teamed up with Hartnett at the Chamber and with Tino back then at TAG, we decided to basically all collaborate and pull it together. And, you all have seen what it's become now. It's sponsoring everybody else at this point. So
what do we do? So if you were starting now, I'm talking about people now, we just went through a whole big thing about how we're going to have to re-engage, right?
Yeah.
Where do you think, a lot about the community organizations around because you're so involved, you're a board member now, CEO Council. I mean, where do you think, where would you recommend that angels, where should we re-engage? How can we what organizations, how do we become a part of things? Because this community has changed a lot.
Yeah. Well, I mean, listen, I don't think there's a place anymore. I think the good news with the growth of our community is, as most of us on the call know, there's not one place to go, and the fact is that there's these different pockets, and there's something for everybody, and it doesn't have to be at the same place where everybody else is getting it. And so if you want to go to a fintech thing or a cybersecurity thing, or a marketing tech thing, those networks and those events or focused content areas exist in our community, and there's more than one of them. And so
but should you, like you did, it seems like you went pretty deep in one. You didn't go.
I went deep. So listen, what I realized is that going back to that whole kind of, hey, I was in sports marketing. What the hell am I doing in technology? I didn't have a skill. So I had to get to know people. And so I said, listen, I'll use the Indian thing. I'll use the technology thing. I need to figure out what the landscape of Atlanta is. And so TIE was my Indian network. The Atlanta CEO Council was my technology network. And then, I had my singles network, which was basically, happy hours on Fridays trying to get dates. And so, from that perspective, I was out all the time. And to your point, I'm like you, a little bit lost in the sense that, I need to get out and see people, and I'm not doing that with the frequency that we used to do. And I think it's a challenge because, Zoom calls are great, but they're really easy to skip.
Do you think it's a smart thing to, as our technology industry, our technology community has changed and the organizations are changing along with it? Is it smarter to kind of choose one place and establish yourself there, and that becomes your sort of network? Or is it like the old days where you should really kind of be everywhere?
Yeah, I think it's tougher to be everywhere. I do think that having some specificity, or call it a trade focus, is good, because you can always hop over to another network and be that guy that is from that other network, right? As long as you've got depth. My sense is that you're something to somebody, but if you're all over the place, you may be nothing to nobody, right?
Right.
So.
You're known by everybody, but you're not known as being somebody that has high value add, right? So that's part of what happens as with any business matures or anything else, and a community matures, we become specialists, if you will. That was the David Cummings story, right? If you think about ATV, you think about, that's automated marketing, right?
Yeah.
That's what they're all about.
He did a great job, right? He knows, he stuck to his knitting, and the rest is, it's still, he's
I think it's difficult when you think about, well, how do I get back involved? Where should I go? What do I do? And you got to kind of I think you got to say, well, where can I add the most value? What network can I add the most value to? And then get involved with it. No, don't just feed off it, feed it.
Yeah. And I think that was one of the things that I learned early on, which is you got to pay it forward, right? You're taking an action item away from whoever you're meeting with. And if you can deliver on that, it tends to benefit both parties. And, if you can do it selflessly, it's even better. So the quid pro quo.
How did you get involved with angel investing? How did that happen?
Yeah. So
you said, I didn't have any technology. I didn't have a particular skill. I didn't have this. You wound up in this network with Ty, eventually the CEO Council. Where did angel investing come from?
So that came around 2008. So when Air Defense exited, that's when I got my first paycheck, or payday rather. And that was the first opportunity for me to start angel investing legitimately. I'd done some.
Was that paycheck that you got from Air Defense, was that like I don't need to work any more money kind of money?
No, that was I'm single, or I'd just gotten married, actually. It was to appease my father-in-law. And so that was just
what
enough.
About your father-in-law?
It was to appease my father-in-law and give him comfort that there was some balance sheet. And so but we had just scuttled the business. We literally were in the construction services space doing outsourced CAD drawings in 2006 to 2008, and that business tanked. I got married in March of that year, or February rather. My wife's not around, but I got married in February, scuttled that business in March, and then the Air Defense happened later that summer. And so it was one of those up and down years for me, but ultimately that was the first money I had to start making some legitimate angel investments. But
why angel investing? Why make investments? Why not just go to work for another air defense type of thing and get some equity and go to the next deal?
Well, but that's again, I was working on that as well, right? It wasn't just that I went straight into investing. I was looking for the next business, and the next opportunity really appeared in the sense of, working with Billy on some of his angel investing, desires, and then the control freak thing happened right at the same time. So I was legitimately looking for what's next for me, and both of those things hit my plate at the same time.
Which two hit your trade? Control freak and
Control freak and the BLH.
And BLH hit at the same time. Okay.
Yep.
So was it more of a Billy from Birmingham that actually pulled you into the investing side?
Yeah, I would say that was a driver around it, because all of a sudden the guy with a big balance sheet shows up and says, "Hey, I want to deploy some capital." My first instinct was, I don't really want to manage money. I don't want to have to register with the SEC and
right.
Report to investors, and I don't want to deal with that stuff. But he's like, "Well, we'll keep it simple." And that was the attractiveness there. It was just he and I. And so, just like Sig and John. And Sig plays a role in this too, as he does with everything. I took Billy to go see Sig, and Sig sits down and says, "Ashish, you may just want to shut your ears." He's like, he leans over to Billy. He's like, "If you expect to make any money doing this, you're doing it for the wrong reasons." And so
that's what Sig told Billy.
Sig told Billy.
And he told you. Were you in? So he's telling you.
I was in the room, but I had my ears covered. But
oh yeah.
But yeah, so that was the introduction. It was Sig saying to Billy, "You're not going to."
What did Billy say to that?
He's like, "You know what? So be it. Let's go take some risk." And so it seems to have worked out. So
he didn't back off from that. So what was the reason that Billy actually was doing? Why let me forget Billy for a second. Why did you had this opportunity? You had a guy with a good balance sheet that comes to you and says, "Look, I want to do some angel investing. I'd like you to kind of lead that." Okay. Well, why did you do it? What's your heart for angel investing? Back then and maybe now. I mean, it could have changed.
Listen, as much as anything, I've been a community builder. I feel like I've been part of this community. And if I could introduce, capital and support the entrepreneurs that I'd see at the events, or I knew that were working on things, why not? The market was growing, and it was an interesting space too, right? The things that I'd done really in sort of the cyberspace and in the call it SaaS markets, they were all starting to really heat up around that time. I mean, and so there was opportunities to go and put money to work. And so, the mix of having balance sheet or having capital to put to work, seeing where the market was, and then having all those relationships, it just felt like it felt very serendipitous in that way, that, oh, hey, okay, maybe this is what I should do. And I wish I could say it was with great intent that I staked out to become an angel investor or VC, but it really just happened.
Okay. So what happened was Control Freak sort of the on-ramp for that?
Control Freak was a side project. So, 2008, I'm putting together, the pitch deck for BLH Ventures, which is, hey, this is what we are going to do. We've got these, couple of areas of focus, and this is the number of investments we want to do. Well, there's this project that Billy had put, we put like 25 grand into. He's like, "Hey, when you're leaving Birmingham after you've met with my guys, why don't you stop by this other office and meet these guys that have started this thing called Control Freak." And I walked out of there and I was just like, I have no idea what this is. I'm not interested. And so, but by the time I got back to Atlanta, I had, an hour and a half to chew on it. I said, "Listen, this could be something where I could tinker around with it in the background while we're really investing." And lo and behold, I think Lance is on the call. Lance was sitting in the ATDC around that time. And I'm like, "Hey man, what do you know about e-commerce?" He's like, "Well, a couple of things." And so there's people like Lance and Blake. Blake was in the other office. Lance was in the office to the left. I was in that.
That's when they were EIRs, right?
Yeah. So, but again, a lot of you guys have played roles in each other's and my where I've come from, or what I've been working on.
So the Control Freak provided some income for you, and also kept you involved with the company as a leader. You were the CEO of it, right?
Yeah. And so that's right. And so what Control Freak allowed me to do was sell some stuff online and generate some income. Okay. And so it was a nice, I got a box of plastic knobs and I had to sell them. And that was really what it came down to. And so we built that brand. And as a result of, $15 transactions, we were able to, pay some bills. And, Control Freak was not, a venture investment. Billy and I both put 25 grand in that business, and it cash flowed, basically from year one. And so that was sort of the money machine. And then, along the way, we were also making investments. So we did Vocalocity was our first investment. Then we did Country Outfitter. And so we had a couple of companies that were successful at the onset.
When you put BLH together, you said I put together the pitch deck for it, if you will, okay, which is basically the strategy for BLH Ventures. So you wanted to get on the same page with Billy, right? So what was that original investment thesis there? Like, where were you going? Where was your deal flow going to come from? And then how are you going to be doing investing?
Yeah. I think that from a deal flow standpoint, it was work the network, right? Hey, everybody, like, we got a checkbook, let's go. And these are the 2 or 3 areas in which we have some, relevant experience or relationships. And it wasn't like I was going to invent some, cybersecurity product. It was, hey, we know some people that are smarter than us. If we see something, can we take it to them? And so, and if we see something that they like or vice versa, we just jump in. And so, and the other part.
So were you following people into deals, or were you leading deals?
We were following people in the beginning, following, then leading, and then following. And so,
like, who were you following into deals?
So the first check I gave to it was to Glenn McGonigal, and so we did Vocalocity with Tech Ops and with Wayne, and that was the first deal. We actually Tatel was pretty significant in that too.
Why would they invite you into that deal? There's a lot of places they could have gone for whatever money you put into that deal. Why you?
Slug. It was a small slug. It was a small slug. And I think, genuinely, I think Taylor was like, all right, listen, this guy doesn't suck completely. And he seems to be pretty easy to work with. We can let him in.
Well, they must have saw something in you too. They saw some value that you were going to bring.
Yeah, I mean,
beyond just money, there was something there. What did they see?
I understand the digital marketing stuff. I know how to, customer acquisition and marketing.
Okay.
And so I'd sit around the Vocalocity board meetings and pull up Google AdWords and that sort of stuff. A little bit more tactical than some of the other board members. Actually, probably not as tactical as some of the other board members. So, Patrick, you know what I'm talking about. And so, but yeah, I mean, but those were, listen, it was a learning experience for me because, I had not been in those meetings before, but I'd been around those people before, and I've been around those companies before.
So you knew Glenn?
Yeah, I knew Glenn. I knew.
Well, how did you know Glenn?
Glenn I'd met through the security business. And so, him having been at ISS and then Just Escape and a couple other companies, he'd been successful in those areas. And then we were actually on the Venture Atlanta board together. And so,
there you go.
So there's a lot of that cross connectivity there, and then through the CEO Council. So, I guess as much, if I'm sort of going back and thinking about it, I've just been around the hoop, right?
Yeah, but what you're doing is, here's again, you're saying something that's really important. It's not that I attend Venture Atlanta. I'm on the Venture Atlanta board with Glenn. When you're working in a community environment like that, or a community organization together, that's when you build trust and respect for each other. And that's where you go to kind of work with people as partners going forward in community deals. And that's something that shouldn't be missed. That's a secret sauce that a lot of people miss.
Well, thanks for pointing that out to me. I just sort of missed it.
You did miss it. Okay, great. Well, how did that deal work? Let's take us through that first deal.
God. So I think it was a Series B round. It was an interesting time for Vocalocity. Let's just leave it at that. But it was an opportunity where I think it was like a $500,000 slug, and we were new to the community in that sense as investors. Nobody really knew Billy. Most of those guys knew me.
Yeah.
And I basically said, hey, listen, when you have something, I will move quick, and I will, it's not a question of yes or no. The answer is yes. And how much? And so Vocalocity was a great business.
How much money did you actually put to work? You said the whole round was $500,000?
No.
Or they wanted $500,000 from you?
Yeah, it was $500,000 from us, or $250,000.
Okay, got it. Okay.
But it was just hey, this deal's coming together like Thursday, and it was a Monday. Hey, can you do this? And the answer was yes. And so we just we just didn't waste any time. And that still continues for us today. We try not to, I'm not going to re-diligence somebody's diligence, especially if they've been thoughtful enough to bring us into something. Right. The answer is, yes or no, and quick no, and a yes that makes it a yes maybe a little bit slower. But we try to move quickly and not get in the way.
How did you? So you went from a follow-on said, I think you said just a little earlier that you have led some deals.
Yeah. So we were, again, the first deal we led, and this is probably 2011, was Ionic. And so I put that term sheet together with Adam Getty in Tatel's office. And so some of that stuff we had to get some help on. And so Alan sat us down inside his boardroom and said, "This is what the deal needs to look like. You guys go figure it out."
So, I was going to say, how do you learn to put a term sheet together? You got to have somebody who's done it before.
Yeah. Well, Alan has this call it VC camp that he runs for every guy that comes into the business that's new. And so he does a great job of really sort of kind of taking you through the ins and outs.
That's so funny because when I interviewed Blake, for my Charlie Pepperelli show thing, that's what it was really about, right? He sat down with Blake, he sat down with me like 3 different times for like 2 hours a time to give me this VC training course.
Well, I think all of us in the community just want to make sure that if people are doing this, that we do it right. And you can end up screwing things up pretty quickly if for a company inadvertently by trying to be a VC, right? And instead of being a business partner. And so
you were early on in this Ionic. Now, Ionic turned out to be something less than you had expected.
Yeah, a lot less.
Yeah. So that deal when did you do that deal, and when did that deal finally just close out?
So I think we put money in 2010 or 11. I can't remember exactly, but it just closed out. Mr. Taylor might be able to give us more specifics on that, but it's one of those ones that had high prospects, but they don't always work, right?
Did you do continuous follow-on rounds?
We did continuous follow-on rounds. We skipped a couple of rounds. The last rounds were pretty interesting for the investors. You had the choice of participating or not, and we opted out. And whether it was smart or not, who knows? But yeah, that one didn't.
I think that's one of the hardest things for angels is once we get in a deal. Yeah, we get in deals because I call it the presence of all hope, right? Yeah. It's always going to be better. And then we get into rounds and we didn't quite hit the milestones, but it kind of looks good. So we put in the next round. How do you get to a decision to pass on a round? What did you do there that you said, it's not for us anymore? We did as much as we're going to do with this deal.
Yeah, I'm very interested in this answer, Ashish. Just saying.
Oh, there you go.
Yeah.
Paul had faced this many a time.
Yeah.
We're in the deal together.
He's asking for a specific reason. No, I mean, listen, how do you know when to pass? I think just when the alignment's off, right? I mean, I think there's,
what does that mean?
Well, I think there's my perception, or at least my experience is that the best deals are the ones that have symmetry for the founders, for the investors, for the employees, right? There's enough of that business to go around, and it's carved up in all its different slices. But once there's asymmetrical sort of ownership, or I'll call it terms, but just when the money gets to become onerous to the company, right? Because of how you have to manage it, and just the board makeup, all that stuff. I think you just get fatigued. And so, and if you don't enjoy spending time with the company or the business, or the market's shifted, and it's not something that you want to get up and go work on every day. And I think that has something to do with it as well.
I think part of, as you're talking about that, I think one of the issues that I find, and the ones that I've sort of backed out of, is really where I didn't do follow-ons. I did a few, and then I'd say that's enough. It seems like that we move from entrepreneur-run or company to board-run company. Yeah. And it really kind of, you lose it at that point. Okay. It becomes institutionalized, if you will, and it loses that zest, vim, and vigor of that entrepreneur, if you will.
Yeah, but I mean, I 100% agree with you. And I think there's also like, again, we will typically stay with the deal. We like to stay with the deal through its life cycle. Like for, what else? Like Better Cloud, for instance. Better Cloud, we continue to put money into. Again, now it's got Excel and all these other guys that are in that deal. I mean, it's crazy for us to keep putting money in. So that's the other natural break point for us, which is like, hey, the valuation's such that, listen, they can take it and run with it. We've done well enough.
Well, your money isn't meaningful anymore, even on that round. Yeah.
And you got big boys, right? And so you got big boys playing with little boys. They tend
well,
not
then
to.
let's step back. You say my best deals. You made that comment on my best deals. Okay. So what was your best deal? And tell me the story of your best deal.
I hope it's still in the works on a couple of these, but CallRail is probably one of, our best deals. And again, that was Wayne literally calling up and saying, hey, you know what? You actually did something at Vocalocity that was helpful to me. Why don't you take a look at this with us? And, and so.
And who was that?
CallRail, Wayne Kellum, sorry.
Oh, Wayne Kellum. Okay.
So Wayne Kellum, was driving that and called me and said, hey, you want to do this? And I said, yes. And, I wasn't even on the board. I'd just show up to board meetings and that was okay. And so I'm very informal.
So that was a term sheet that was put together already. So you just joined.
Yeah, I think
a deal that was already formulated.
Yeah. Yeah. And so, and again, it was, Wayne and two other folks that were putting money in, and it wasn't complicated. It was pretty straightforward. And, that company's, it's kicking butt still. I will tell you that the best deal that we probably did was our first deal, Vocalocity, which, I think we made 9x our money in 18 months.
Wow. That's good.
Yeah. And then the deal after that, which was Country Outfitter.
Isn't that funny? When you start something like that, if your first 2 or 3 deals, you get some sort of a return like that, it just establishes you.
Well, it makes sure
takes all the pressure off. It's all house money now, right?
Yeah. It makes your business partner feel pretty good.
Yeah.
And we had 2 of them. So Country Outfitter, we got recapped. I mean, General Atlantic came in and, Nora was in that one as well. So Tatel brought me into that deal. And, I was running Control Freak at that time. And because of the e-commerce experience, we flew to Northwest Arkansas and did that deal. And I was sort of the marketing guy on that deal. So, okay, hey, I can understand the best practice.
And that's why Tatel brought you in, because of that value of the marketing side.
Yeah. And
really cool. That's really cool. So let's open it up. Maybe there's other people have some questions here. This has been great. Do we have questions, Brad?
This has been great. We don't have any in the chat, but I believe Chris Moreno has one. So feel free to unmute yourself, Chris, and go ahead.
Yeah, sure thing. Hey guys, this has been great and appreciate the insight. Ashish, would love to kind of hear how your thesis have changed over the years, of investing and how you approach, thesis, whether it's on companies, thesis on founders. Would love to kind of hear how, what you look back on and how that's affected you.
Yeah, I think where I've probably matured in some of my thinking is I've continued to play in similar spaces. We still say that we do cyber, SaaS, and e-commerce. Those are the 3 pillars that we kind of center our investment thesis around. What I'll say that I've done less of is chase. We're not out there sort of, banging on people's doors, trying to deploy capital. We are really in the mode of trying to help entrepreneurs build businesses by being, I use the line, hey, listen, entrepreneur, I'm more you than me, in the sense that, you've got an operator on the other end of the phone or this other side of the table, and having Control Freak actually inside the BLH office was probably my best asset. When an entrepreneur would walk through an operating company and then come into my office, it was always great for them to see a business in action, and then I was running that company, and that, and we had capital to put in their business. And so if they needed marketing support or whatever it was, they can just walk outside the door and I'd grab my VP of marketing or my director of e-com or whatever it was. But I guess to that point, we've become just a lot more in tune to the people piece of all these businesses. And so we're not interested in working with anybody that we don't like. We're not interested in, high flying sort of, all right, chase it because everybody is. And, in a competitive bid process, we're not doing that. We are, we're a really good co-investor. We'll do the work that we need to do, and hopefully it's sufficient enough to get us a seat at the table or a look or a call when the opportunity's there.
Do you think your value add is becoming dated?
Yes. Every day.
How does that impact you going forward?
I mean, listen, I honestly, my biggest fear in selling Control Freak was that, that was a part of my identity, but like, what am I working on tomorrow? Like what's going on in the marketing stack? What's going on in, on the customer acquisition side? That stuff moves so quickly.
Yeah.
Amazon, we had a kick-ass Amazon business, and, that's people were fighting over my resources in Control Freak within the organization that bought us, because they knew how valuable those people were. That to me is that's a concern for me, which is, hey, you got to stay sharp, especially in that world. Otherwise you're dated. Everybody says you got a year shelf life. I don't know what that means, but I don't feel like it's that much.
Maybe that means is that you still have a shelf life. That's a good thing. When
maybe.
You don't.
Maybe.
Ashish, Graham has a question. What was your highest multiplier to date?
Oh God. It might have been, Vocalocity, just because it was so, from an IRR standpoint, it was quick and it was quick. And so, and we put money in a round that just had great terms. And so we were able to get some extra juice from that. And so it's probably, 9X probably it. We've actually, if I think back, Call Wheel's probably up there. And then Control Freak. Control Freak was, God, we haven't done the multiple. I need to write that one down, but that's in the thousands. That was 50,000.
I love that you didn't. I love it that you said, what am I going to do with this thing? By the time I made it back to Atlanta, I said, yeah, this might work out for me. Give me something to do, make a few bucks,
Yeah. Well, I was getting, that got me $6,000 a month in W-2 income.
And I think that's important for a startup angel. I think you got to have income. I think it's a good thing. Yeah. So I really admired you for doing that, and it kept your skills up.
Well, and that's it. I think you got to keep the knife sharp. So
yeah, pretty cool. I'm seeing. Is there other? I have another question. I have a lot of questions, but is there anybody else that has a question? I don't want to step in front of anybody.
Yeah, Barry had a question. How many investments do you do a year generally, Ashish?
We don't have a set number, but we've got an inordinately large portfolio for just me. We've got 60 plus, investments. So, wow. A couple of them are LP, manager, fund investments, but we've got 40 plus direct company investments all over,
wow.
California to, places in between. So on an annual basis, probably doing 4 to 5, maybe, it just depends on the size. And
how much money would that be that you're putting to work every year?
Probably 8 to 10 million.
You're putting to work every year?
Yeah. Including follow-ons.
Wow. Serious. You're investing 8 to 10 million every year.
Yeah. Probably closer to 8, but yeah.
Hey, that's a new level for angel investing.
Yeah. And so we're kind of in this.
He's acting like he's like a $30 million fund.
He's investing more than you, right, Paul?
Dude, this guy, he's like, you don't know it. He's like the 5th largest venture capital firm in Atlanta.
Yeah, I guess we didn't know that either. No, but,
go ahead. Sorry. I was just going to ask another question.
Yeah, don't interrupt Paul Eifeldano, okay?
Yeah.
Just don't. It's hard for me to get into a meeting, and here he is.
Oh
I just want to make it all right.
Well, I couldn't not hear Ashish talk. He hasn't bought me lunch in over a year, just saying.
All right.
I'll buy you lunch.
Go ahead. I'm sorry, Brad.
No, I'm sorry. Do you think we're in a valuation bubble, or do you think these valuations are here to stay? And I've spoken with a lot of investors in the Southeast that have expressed a little hesitation with some of the deals that they're getting outpriced from some of the West Coast firms.
Yeah. Yes.
Yeah. You think it'll stay?
I mean, remember 1999? It will end badly. Right?
Whoa.
We've seen this picture before. I mean, it's
Debbie Downer.
Yeah. Well, valuation downer. Yeah. I don't know. I mean,
Let's
listen.
Talk about this a little bit. Just the question I had is, I'm reading more than I'm seeing. Okay, but I think we're seeing some of it with things like Greenlight, or $260 million investments, for West Coast for $2.3 billion valuations, right? With a company with $50 million in revenue. It's but what I'm reading is that you've got private equity firms that are moving downstream into early stage investing. Okay. And that's bringing VCs and all of a sudden I'm wondering again, we're angel lounge. Okay. Where do angels play anymore? Is there angel investing anymore? Has it changed so much that it's not meaningful and that angels need to become more fund investors? What do you think?
I mean, my perspective is there's always good businesses to put money into. It may just be the sector that we're in, right? Like our sector is hot and our sector has got dump trucks full of money being backed up into it. But there's other businesses created all the time, right? There's services businesses, like you well know, may not take the same amount of capital.
Right.
There's other product companies. I mean, again, Control Freak's a great example, right? 50 grand, right? We did 25 million in revenue off of 50 grand. And we were, 30% EBITDA business. And it was a great company, great business, great product. And, that was an angel opportunity, if any. I think software is, it's a challenge if you're trying to deploy capital because you're just competing. I mean, Nelson, you guys you're seeing it too, right? I mean, everybody's fighting to put money to work.
And it's posted, hey, are people wondering whether 30x to 40x forward revenues is not sustainable? Really?
Right.
I've seen a couple of those deals, and they're getting it.
Yeah.
30,
well, I mean,
40x forward revenues.
We've got. I mean, listen, I'm concerned. Like I was talking to a colleague of mine who's an LP in call it a large fund, who is also an investor in a portfolio company that we share, but. So he's on both sides. He's like, listen, that fund just raised $1 billion in Q4 of last year, and they've already deployed it by Q1 of this year. They just put, was it 220 million pre on a $2 million revenue company? Yeah. And so he's like, listen, it's just, so I don't know. I'm just not interested in deploying, the proceeds we just made at peak market.
So what you're saying is, what I hear you saying for angels, your advice is, no, you're not going to be able to get into what we'll call the hot sectors, like maybe fintech or whatever, right? Because there's too much money that's running after that, right? So that means that, do I hear you saying that angel investors need to come up with an investment thesis that where there's good businesses and money's needed, but it's not drawing down, it's not attracting those businesses in that industry isn't attracting the high multiple investors.
Yeah, I think that's for sure. I mean, listen, we all, I'm not calling anybody out, but we travel in herds, right? And so to the extent we can get into deals, great. But I just wouldn't be chasing anything. And I think there's actually more opportunity in company formation. And so you sort of take a little bit of stage risk instead of price risk. And because, the other guys with the big dump trucks full of money can always put more money in, and they can always crush the valuation of the company, and the angels get crushed with it. And so I'd just rather go start something that's a lot more, appetizing from a price standpoint versus buying into something that's, just inflated.
So as an angel, we should be looking for more pre-formation to formation.
I think so. I mean, that's again just that's where
and
I'm
apply your expertise to it, right?
Yeah,
I mean, that's just what you did with Control Freak. I mean, that's basically where you were at that point.
Yeah. I mean, I think it just feels more prudent. So
I think that's true angel investing. I think that's where I started, and it sort of worked out for me. That's interesting.
Yeah.
Chris, you had a question?
What was that?
Yeah, I was actually going to ask that. Oh, that was my similar to my question was about moving earlier stages, more and more people coming out. But I was going to ask, my thesis is around the idea that all these funds, just like real estate, right? You have real estate cap rates going to all-time lows, right? 2 and 3 seems very similar to what you were talking about. And would you say that because the difference between an angel and like your fund tends to be more, we're bought into our money, right? It's our money. I don't have to deploy it today. I can wait and find good deals. But these funds have to deploy that $200 million, like you said. So are you thinking it's the same cases in real estate where they got to deploy that capital? They need to be doing deals, even if they're overpaying and kind of pushing it down the road. Is that what you're thinking? And do you also look at it like real estate?
I don't know real estate that well, so I can't speak to it. But listen, it's funny because we were just down in Florida, and one of my YPO forum mates sold his house 6 months ago. We bought it for like 3, sold it for 6, and could have sold it for 8 if he'd waited. And so when I asked at the beach, and I met this guy who happened to have the franchise for Sotheby's down there. And I asked him, I was like, hey, what's going to happen? Is this going to retrench? He's like, no, we'll probably just plateau off and nothing will move. Pricing won't go higher for a period in time. So I think that's the difference in real estate. Whereas I think in certain markets, things may just plateau and sort of sit there for a while. On the technology side, these companies will get their valuations crushed. At least you end up with a CD with code on it versus, something you can go live in.
And then what about, if it's okay, just real quickly on DeFi and crypto? Obviously, it's kind of insane. NFTs, I don't buy NFTs. I'm not interested in creating DAOs, but I wanted to get your take on crypto and DeFi, how you're approaching it.
No, I don't even track those markets. I mean, it's, Bitcoin price is 45,000 because it says it on Bloomberg or whatever, but that's the closest I've come to Bitcoin.
All right.
I think the other thing too, Charlie, you asked like, all right, like, what have you learned, right? I'm just sticking to what I know at this point and not screwing around with things that are, it's already speculative enough when we're building these businesses. Last thing I'm going to do is go, venture out into another area that I'm not, I don't have any.
How do you get to a point? How do you keep going? You get to a point where, like you said, I love what you said about BLH. You said, it's kind of a joint checking account. So obviously you guys have done extraordinarily well. Okay. Extraordinarily well. At some point you're just like, enough's enough, right? I mean, how much am I going to be as active as I was before? Am I going to kind of check back a little bit? I mean, how do you keep going? I mean, it's easy if I'm Billy to say, yeah, just keep going.
I'm figuring it out right now. I mean,
okay.
I'm in that mode. I mean, it's sort of weird to not, be chasing things for a change.
Because if you're a venture fund, I mean, it's a business, and you've got to get next generation leadership in. You're always raising funds and all this kind of stuff, right? This is different. This is like, okay, me and Billy did pretty well.
Yeah, and then we would decide to hang it up like Sig and John did it one day. Maybe we will. But
yeah, got it.
In the meantime, we're still, listen, I'm 44. I'm not. I'm not going out to pasture or anything anytime soon, but I think I just want to look at exciting things in areas that we have some domain expertise and find great people to work with. The team building aspect of what we did at Control Freak was great. And, you probably hear you talking more about Control Freak than ventures, but I think I'm truly an operator more than I am a venture guy. And one makes me better at the other. And gives me empathy for the other. And so for that perspective, I think it's a good time to sort of hang back and, let the chips fall. I don't want to go and spend a bunch of money at peak valuations only to have to put more money into.
But I think that your ideals sort of come through a little bit more In other words, the future investing for you, once you hit a certain number personally in your life, then the investing really, it changes from, well, it's just to make more money. It's really the ideals start to show up. Your values start to become much more important, as you play going forward.
Yeah, no, I think it's absolutely right. I mean, I think we talked about it. I was like, getting the money was fairly anticlimactic.
Mm-hmm.
It's like, all right, well, that was great. You checked the box, and now what's next?
Yeah, it's not going to change your life. It's not going to give you more security. It's not going to do any of those things. In fact, it's going to actually be more of a burden. You got to move more money. You've got to do more things. What does God expect of me with this money? Why do I have this money? How do I help the community now with this money? It starts asking a lot of other questions. Yep. Interesting. Any last questions for Ashish? He did such a great job here. Thanks for sharing with us.
Yeah. Thanks.
Anybody else?
Hey, Ashish, it's Frank Ty. Thank you for coming. One of the reasons Charlie and I were thinking you were going to be a great guest for this group is we're all trying to learn from each other. And as you kind of said, you modeled what others did in front of you, and you're a great networker. I'm curious, you went from operator to angel to sort of super angel VC. And I think you have been part of some of the best deals in Atlanta. For instance, I don't know if you're comfortable talking about it, but I know that Cypress is one that you're in. And that's something that everybody in town now says, wow, that's the hottest thing going. That thing is going to the moon. It's amazing. And you can't get in. It's too late. What did you see? Like in my position as an EIR at ATDC, that's one of the ones I thought was fabulous, but it really was at the time, it really wasn't going anywhere. And you and Blake and others came in and you got super involved in bringing in the CEO and more involved maybe than just the passive angel. What was it about? How were you able to spot that? Because I think that's going to be a tremendous success for you, but it was sitting there, not going anywhere. And then you guys were a catalyst for it. So you've gone from all of that to also actively being involved.
Yeah. I mean, and to not being involved. So I guess, listen, that's Blake. I wish I could take any credit for it. I showed up because of my relationship with Blake, and it comes back to that. It's every one of these deals is because of somebody else who's involved in it. It wasn't me that said, all right, that's the one, let's go. It's one of my friends or one of you guys that says, hey, I'm looking at this. You might be able to add some value. But again, it's just like you said, it's the community. It takes all of us to get these things done. And we get lucky. I mean, like, listen, I still can't tell you exactly what Cypress does. I'm joking, but it is. I mean, listen, once you're involved, and then you're sort of not once the big boys come in, and so and you get lucky, and they could also fail. I mean, like, listen, Ionic was a failure, right? And it sucked. It built great stuff. They had great investors, and but sometimes they don't work, right?
Right. Well, guys, we got to call it a day here. We're getting to a 1:15 cutoff here, but Ashish, thank you so much for doing this. Being so transparent with it too. It's just very, very helpful for all of us. And congratulations. I mean, that was a great 10-year run. Thanks. And I hope your next 10-year run, for whatever it might be, has as much impact, going forward. So thank you so much for doing this.
Thanks, guys.
And thank you all for attending Angel Lands this month. I hope you pulled a lot out of this, because I certainly have. Our next meeting is going to be in September, third Thursday in September, and that is our end of quarter, which means we'll have two companies from the ATDC that will be presenting to us. And it looks like it's going to be a Zoom meeting again, based on what I found out earlier in this meeting. So again, thanks to our special guest, Ashish Mistry, and we look forward to seeing you in September. So thank you so much. Thanks, guys. Take care.
Thanks, Ashish.
I got you.
Thanks, Ashish.